Based on the historical data and forecast, Bitcoin exhibits an overall upward trend, consistently testing the resistance level of $66,600 and finding support around $65,000. The RSI fluctuates, but generally stays within a range, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands show that the price is currently approaching the upper band, suggesting a potential pullback is possible. Considering these factors, I recommend a long position strategy with a focus on capitalizing on short-term upward movements while mitigating risk. My proposed strategy involves entering a long position at $65,400, coinciding with the initial forecast price and the upper Bollinger Band. Given the recent price action and the support level at $65,000, I will set a stop loss at $64,800 to limit potential losses. The target price will be $66,100, aligning with the forecast prices and providing a reasonable profit margin. This strategy leverages the anticipated upward momentum while incorporating risk management techniques to protect capital. We will reevaluate the position after July 29, 2026 Wednesday, based on the actual price movement and market conditions. Based on the historical data and forecast, Ethereum shows a generally upward trend with recent price fluctuations. The RSI indicates that the asset is currently neither significantly overbought nor oversold, fluctuating around the 58 to 66 range. The Bollinger Bands suggest that the price has been trending towards the upper band, indicating a bullish momentum. Considering these factors, I propose a long position strategy with a focus on capitalizing on the anticipated upward movement in the forecast period. The entry price will be $1,910, coinciding with the beginning of the forecast period. A stop loss will be placed at $1,880, just below the recent support and the lower Bollinger Band, to limit potential losses. The target price will be set at $1,980, aligning with the forecast high and the upper Bollinger Band, offering a reasonable profit margin. To refine the strategy, I will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, I will enter a long position at $1,840, the support price, with a stop loss at $1,810 and a target price at $1,940. Conversely, if the RSI rises above 75, signaling an overbought condition, I will consider shorting the asset, but given the overall bullish trend, this is less likely. The combined strategy prioritizes the upward trend while incorporating RSI and Bollinger Band signals to enhance precision and risk management. This approach aims to maximize returns while mitigating potential losses, offering a robust investment plan for Ethereum. Based on the historical data and forecast, BNB shows a slightly downward trend with price fluctuating around the support price of $567. The RSI indicates that the asset is currently in a neutral zone, not significantly oversold or overbought. The Bollinger Bands suggest that the price is approaching the lower band, indicating a potential short-term pullback. Considering these factors, I propose a cautious strategy focusing on potential short-term gains. We will initiate a long position at $563, anticipating a bounce from the support level and a move towards the upper Bollinger Band. The stop loss will be set at $558 to protect against a potential breakdown below the support, and the initial target price will be $573, aligning with the center of the Bollinger Bands. To refine the strategy, we will implement a trailing stop loss. If the price reaches $573, we will move the stop loss to $568, securing some profit while allowing for further upside potential. If the price continues to rise, we will adjust the stop loss accordingly, always maintaining a buffer of $5 below the current price. If the forecast data shows a continued downward trend, specifically if the price drops below $560, we will immediately close the position and reevaluate the market conditions. This combined approach of RSI, Bollinger Bands, and support/resistance levels aims to maximize potential returns while mitigating risk. Based on the historical data and forecast, Solana demonstrates a generally upward trend, albeit with some volatility. The support price has remained consistently at $72, while the resistance fluctuates around $81.9. The RSI values have largely remained between 46.7 and 55.1, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show price fluctuations within a range, with the lower band consistently above $65 and the upper band below $86. Considering these factors, I recommend a long position strategy. Entry price should be $77.6. The stop loss should be set at $72, just below the support level, to limit potential losses. The initial target price should be $79.1, aligning with the forecast price on July 28, 2026. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, indicating an oversold condition, we could consider a long entry. Conversely, when the RSI exceeds 80, suggesting an overbought condition, we might consider exiting the position. Furthermore, if the price touches the lower Bollinger Band, it could signal a potential buying opportunity. If the price breaks above the upper Bollinger Band, it could indicate a potential selling point. For this specific scenario, given the upward trend and the forecast, I suggest holding the position until the target price of $79.1 is reached, or until the RSI reaches 80, whichever comes first. If the price reaches $79.1, take profit and consider re-entering when the RSI falls below 20. Based on the historical data and forecast, TRON has been trading within a defined range between $0.323 and $0.332. The RSI indicates that the asset is currently not significantly overbought or oversold, fluctuating between 44.4 and 57.4. The Bollinger Bands show that the price has been oscillating around the middle band, with occasional touches of the upper and lower bands. Considering this, I recommend a moderately bullish strategy. We will initiate a long position at $0.328, anticipating a slight upward movement based on the forecast. A stop-loss order will be placed at $0.323, just below the support level, to limit potential losses. The target price will be set at $0.332, aligning with the resistance level. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will enter a long position at the prevailing price. The stop loss will be set at the bottom of the Bollinger Bands, and the target price will be the middle of the Bollinger Bands. Conversely, if the RSI exceeds 80, suggesting an overbought scenario, we will avoid entering a position. This combined approach, leveraging both Bollinger Bands and RSI, aims to maximize returns while managing risk effectively. The final portfolio will prioritize the moderately bullish strategy with an initial long position at $0.328, a stop loss at $0.323, and a target at $0.332, with adjustments based on RSI signals. Based on the historical data and forecast, Dogecoin shows a slightly downward trend with recent price fluctuations. The RSI consistently remains below 50, indicating a generally weak momentum. The Bollinger Bands have been narrowing, suggesting a period of consolidation, but the forecast prices are trending downwards. Considering these factors, I recommend a short selling strategy with a cautious approach. The entry price will be $0.071, capitalizing on the downward forecast and the RSI hovering near oversold levels. The stop loss will be set at $0.073, just above the recent resistance and to protect against unexpected upward movements. The initial target price will be $0.068, aiming for a reasonable profit while acknowledging the potential for further decline. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider a partial covering of the short position at $0.072. Conversely, if the price touches the lower Bollinger Band, around $0.0705, it might signal a potential bounce, prompting us to tighten the stop loss to $0.072 and reevaluate the position. The final target price will be $0.065, contingent on sustained downward momentum and confirmation from technical indicators. This combined strategy offers a balance between capitalizing on the downward trend and mitigating risks through dynamic adjustments based on RSI and Bollinger Band signals. Based on the historical data and forecast, Zcash exhibits a fluctuating trend with a recent downward bias in the forecast period. The support price is consistently at $463, and the resistance is at $558. The RSI values hover around 55 to 65, indicating neither extreme oversold nor overbought conditions. The Bollinger Bands show periods of contraction and expansion, suggesting varying degrees of volatility. Given this, I propose a strategy that combines RSI and Bollinger Band signals for optimal risk-reward. We will utilize a momentum strategy, looking for opportunities when the price approaches the support level and the RSI dips below 30, signaling a potential bounce. The entry point will be $512 when the forecast price reaches this level and the RSI is below 30. A stop-loss order will be placed at $495, just below the bottom of the Bollinger Bands, to limit potential losses. The target price will be $558, aligning with the resistance level. This strategy aims to capitalize on the potential rebound from the support level, while the RSI and Bollinger Bands provide additional confirmation and risk management. The expected profit is $46 with a risk of $17. Based on the historical data and forecast, Cardano shows a slight upward trend. The price has been fluctuating within a support of $0.158 and a resistance of $0.19. The RSI indicates that the asset is currently not in oversold or overbought territory, but trending towards the overbought zone. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential pullback or a continuation of the upward trend. Given this information, I propose a moderately bullish strategy. We will initiate a long position at $0.167. To mitigate risk, we will set a stop-loss order at $0.158, just below the established support level. Our target price will be $0.173, aligning with the forecast price and providing a reasonable profit margin. To further refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI reaches 80 or higher, indicating an overbought condition, we will consider taking profits or adjusting the target price. Conversely, if the price touches the lower Bollinger Band, indicating a potential buying opportunity, we can consider adding to our position. This dynamic approach allows us to adapt to changing market conditions and maximize returns while minimizing risk. The overall portfolio will be 60% long Cardano, 20% in cash, and 20% in other cryptocurrencies. This diversified approach ensures that we are protected from potential losses while still capitalizing on opportunities in the market. Based on the historical data and forecast, Chainlink shows a generally upward trend with price fluctuations. The RSI values mostly remain between 50 and 65, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility and potential for price movement. The forecast for the next week predicts continued upward momentum, with prices ranging from $8.52 to $8.76. Considering these factors, I recommend a long position strategy. We will enter a long position at $8.52, placing a stop-loss order at $8.45 to limit potential losses. The initial target price will be $8.76, aligning with the forecast high. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider entering a long position at the lower Bollinger Band. Conversely, if the RSI exceeds 70, signaling an overbought condition, we'll consider exiting the current long position or initiating a short position. For the current long position, if the price touches the upper Bollinger Band, we'll move the stop-loss to the center of the Bollinger Band to secure profits and manage risk. The final target price will be $8.85, anticipating further upward movement based on the overall trend and forecast. Based on the historical data and forecast, Stellar demonstrates a slightly downward trend, with the forecast prices consistently below the recent closing prices. The RSI fluctuates around the mid-range, currently at 47.8, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Given the current conditions, I propose a cautious strategy focused on short-term gains. We will implement a strategy based on the RSI, aiming to capitalize on potential short-term bounces. The entry price will be $0.182, triggered when the RSI falls below 20. The stop-loss will be set at $0.172, coinciding with the support level, to limit potential losses. The target price will be $0.188, just below the recent resistance level and a reasonable profit target. This strategy combines the RSI indicator for identifying potential oversold opportunities with the support and resistance levels to define risk management parameters. The predicted price movement based on the forecast data is downward, so this strategy will be executed with a small position size to manage risk. Based on the historical data and forecast, Aave shows a clear upward trend. The price has been fluctuating within a range but consistently approaching the resistance level of $115. The RSI values, although oscillating, haven't breached the oversold level of 20, indicating continued bullish momentum. The Bollinger Bands confirm this, with the price frequently touching or exceeding the upper band, suggesting strong buying pressure. Therefore, I recommend a long position strategy. Entry price will be $97.4, with a stop loss set at $94.1, just below the established support level. The initial target price will be $105, aligning with the forecast for July 29, 2026. To maximize returns and manage risk, I propose a tiered target approach. If the price reaches $105, take partial profits, securing a portion of the gains. Subsequently, move the stop loss to break even to protect the initial investment. If the price continues to rise, set a second target at $115, the resistance level. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a comprehensive approach, aiming for high returns while minimizing potential losses. The portfolio will be 60% long position, 20% in cash, and 20% in short position to hedge against the risk. Based on the historical data and forecast, Conflux shows an upward trend. The price has been fluctuating within a defined range between 0.0424 and 0.0516, with the recent price action indicating a move towards the upper end of this range. The RSI values have been oscillating around the midpoint, with brief periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering these factors, I recommend a long position strategy with an entry price of $0.0458. A stop-loss order should be placed at $0.0424, just below the established support level, to limit potential losses. The initial target price should be $0.0477, aligning with the forecast price and the upper Bollinger Band. To optimize returns, I propose a dynamic approach incorporating RSI and Bollinger Bands. We will initially enter a long position at $0.0458, with a stop loss at $0.0424. If the price reaches $0.0477, we will take partial profits and move the stop loss to the center of the Bollinger Band, around $0.0447. As long as the price continues to rise and the RSI remains below 80, we will maintain the long position, adjusting the stop loss to protect profits. If the RSI reaches 80 or the price touches the resistance level of $0.0516, we will take full profits and exit the position. This strategy combines trend following with risk management, aiming for high returns while minimizing potential losses. Based on the historical data and forecast, Pyth network exhibits an upward trend. The price has been consistently trading near the upper Bollinger Band, indicating strong bullish momentum. The RSI values are generally above 60, suggesting that the asset is not yet overbought. The forecast for the next week predicts a continued increase, with prices ranging from $0.0502 to $0.0521. Considering these factors, I recommend a long position with an entry price of $0.0502. To manage risk, set a stop-loss order at $0.0473, just below the support level. For the target price, I aim for $0.0521, aligning with the highest forecast price. To refine the strategy, I will incorporate the RSI indicator. If the RSI falls below 30, which indicates an oversold condition, consider entering a long position. Conversely, if the RSI exceeds 70, suggesting an overbought state, consider taking profits or initiating a short position. However, given the current upward trend and bullish indicators, the primary strategy remains a long position. Therefore, the portfolio will prioritize the long position strategy with an entry price of $0.0502, a stop loss at $0.0473, and a target price of $0.0521. This approach balances potential gains with risk management, capitalizing on the anticipated upward movement of Pyth network. Based on the historical data and forecast, Starknet shows a downtrend with periods of consolidation. The support price is consistently at $0.0278, while the resistance fluctuates around $0.0317. The RSI has been oscillating between 32.5 and 49.3, indicating periods of oversold and overbought conditions. The Bollinger Bands suggest that the price is currently near the lower band, indicating potential for a bounce. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. My recommended strategy is to initiate a long position when the RSI dips below 30, near the support price of $0.0278. The entry price will be $0.0278. A stop-loss order should be placed just below the support level at $0.0275 to mitigate potential losses. The initial target price will be the middle of the Bollinger Bands, around $0.0299. If the price reaches this target, we will reevaluate. If the price breaks through the resistance level of $0.0317, we will adjust the target price to $0.0303, taking into account the forecast data. This combined approach aims to capitalize on potential price rebounds while managing risk effectively. Based on the historical data and forecast, Ondo exhibits a clear upward trend. The price has consistently moved above the Bollinger Band center, indicating bullish momentum. The RSI values have mostly remained above 50, further supporting this trend. The forecast for the next week projects continued price increases, reaching $0.449. Considering these factors, I recommend a long position strategy. The entry price should be set at $0.391, coinciding with the first forecast price. A stop-loss order should be placed at $0.389, just below the support level, to limit potential losses. The initial target price should be $0.431, aligning with the forecast price for July 26. To optimize returns, we can implement a dynamic target price strategy. As the price approaches $0.431, we can move the stop-loss order closer to the current price to lock in profits. If the price continues to rise, we can set a second target price at $0.449, the highest forecast price for the week. This combined strategy leverages the upward trend, utilizes RSI and Bollinger Bands for confirmation, and incorporates dynamic adjustments to maximize profitability while managing risk. This portfolio will be the most efficient of the three strategies. Based on the historical data and forecast, Lido DAO shows a clear upward trend. The RSI consistently remains above 50, indicating bullish momentum. The forecast predicts continued price increases, reaching $0.445. Considering these factors, I recommend a long position strategy. Entry price should be $0.394. The stop loss should be set just below the support level at $0.385, specifically $0.384. The initial target price should be $0.4, aligning with the first forecast price. To refine this strategy, we can incorporate the Bollinger Bands. When the price touches the lower band, it indicates a potential oversold condition. However, given the upward trend, we will not trigger a buy signal. If the price reaches $0.4 and the RSI is below 70, we can move the target price to $0.403. If the RSI reaches 80, we can take partial profits and move the stop loss to the break-even point. The final target price will be $0.445 based on the forecast. This layered approach allows us to maximize profits while managing risk effectively. Based on the historical data and forecast, EIGEN Eigenlayer shows a sideways trend with fluctuating prices between the support level of $0.227 and the resistance level of $0.247. The RSI indicator fluctuates around 50, indicating neither strong buying nor selling pressure. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering the current RSI of 53.3 and the forecast prices, I recommend a moderately bullish strategy. We will initiate a long position at $0.238, placing a stop-loss order at $0.227, just below the support level, to protect against a potential downside reversal. The initial target price will be $0.242, near the recent resistance level, aiming for a quick profit. To refine the strategy, let's incorporate the Bollinger Bands. If the price breaks above the upper band, it signals a strong bullish momentum, prompting us to raise the target price to $0.247. Conversely, if the price touches the lower band, it indicates a potential oversold condition, and we should consider tightening the stop-loss to $0.23. The forecast suggests a price near $0.242 within the next week, making this a reasonable and potentially profitable trade. This combined approach of RSI and Bollinger Bands should give a high return. Based on the historical data and forecast, Ethena shows a clear upward trend. The price has been consistently moving towards the resistance level of $0.0957, and the forecast for the next week predicts continued growth, reaching $0.0934. The RSI is currently at 62.5, indicating that the asset is approaching overbought territory, but not yet significantly overbought. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. The entry price should be $0.0854 on July 23, 2026, coinciding with the start of the forecast period and a slight dip after recent gains. A stop-loss order should be placed at $0.0829, just below the recent support level and the bottom of the Bollinger Bands, to limit potential losses. The target price should be $0.0912, aligning with the forecast price for July 26, 2026, and providing a reasonable profit margin. This strategy combines trend analysis, forecast data, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, eCash shows a generally upward trend, with price fluctuations within the support and resistance levels of $0.0000730 and $0.0000870. The RSI values indicate periods of both oversold and overbought conditions, suggesting potential for both buying and selling opportunities. The Bollinger Bands have been widening recently, implying increased volatility and potential for price breakouts. Considering these factors, I recommend a long position strategy focused on capitalizing on the anticipated upward momentum. We will utilize the RSI and Bollinger Bands for entry and exit signals, combined with support and resistance levels for risk management. Our strategy involves entering a long position when the RSI dips below 30 and the price touches the support level of $0.0000730. The entry price will be $0.0000730. The stop-loss will be set just below the support level at $0.0000720 to mitigate potential losses. The initial target price will be the resistance level of $0.0000870. If the price reaches the resistance, we will move the stop-loss to break even. Furthermore, if the price continues to rise, we will set a second target price at $0.000000900. The strategy will be adjusted daily based on the updated RSI and Bollinger Bands values. This approach aims to maximize profits while minimizing risks by leveraging technical indicators and price levels. Based on the historical data and forecast, Hedera shows a generally upward trend, albeit with volatility. The RSI consistently fluctuates, but has recently crossed above 40, suggesting increasing buying momentum. The Bollinger Bands have been widening, indicating increased volatility, and the price is currently approaching the upper band. Considering these factors, I recommend a long position with an entry price of $0.0689. To manage risk, place a stop-loss order at $0.067, slightly below the recent low of the Bollinger Bands. The initial target price should be $0.0742, aligning with the forecast price for the week. To refine this strategy, I suggest a layered approach. If the price reaches the initial target, consider moving the stop loss to break even and setting a second target at $0.0763, the resistance level. If the RSI reaches 80, consider taking partial profits and tightening the stop loss. This layered strategy allows for capturing upside potential while mitigating downside risk, maximizing returns in a volatile market. This approach combines technical indicators with price action and support/resistance levels for a robust investment strategy.